Hello from TrendSignal. Just our review of the markets midweek on the 27th of May, the last week in May. Quite a turbulent week so far. Despite the fact that we had bank holidays across the board on the Monday, we've seen a fairly sharp move up in the US dollar versus the majors. Certainly against the yen, sterling, and very much so against the euro. Stronger data, such as the core CPI inflation data, that I think caught some traders off guard. So we've seen a sharp knee-jerk reaction higher in the US dollar, coupled with a significant fall in US equities, which was witnessed on Tuesday, largely as a result of the stronger dollar and the concerns that the Fed will be raising rates at some time this year. In fact, a simple explanation for the markets is that traders have been jostling for position on whether the Fed will raise rates this year. The consensus has moved from June, which was sort of the idea early on in this year, but we've moved it out to September. But I certainly think the first rate hike will be taking place this year, and if it is September, that is only just over 3 months away, possibly. Bond markets, well, I guess they benefited to a certain extent just recently from the move as traders shift capital into the sort of safe haven of treasuries and bonds and gilts. The Greek question, well, that is never ending, unfortunately. The question is, how can Greece unlock these much needed bailout funds? So far this month, the Greek government have managed to tap emergency funds held at the IMF to pay off debts with the IMF. Yes, that is something that doesn't happen too often, but they managed to deal with their first payout or repayment to the IMF. But the situation does look pretty dire, with little progress towards an agreement with the IMF, ECB, and European Commission, so-called Troika. The G7 are meeting today. In fact, it's a 3-day meeting. I say today being Wednesday the 27th, a 3-day meeting culminating on Friday, meeting in Dresden, and I suspect it may well be dominated by this particular topic, which hopefully won't dominate it too much, but they have other things to deal with, like economic growth and tax evasion, amongst others. I think the likelihood of a Greek deal seems as remote as ever, and this is despite Tsipras, the Greek Prime Minister, the leader of Syriza. He did receive backing from his party to conclude or finalize a deal, but some participants say a deal could be agreed by the end of the week, but the gaps are so large that it just seems so unlikely. I guess if it happens, it'll be a result of a massive climb down by Syriza, which I have to say does not look likely, certainly on today's evidence. Tsipras, in fact, had been facing pressure from the left of the party not to cave in on austerity. Anyway, the Greek government, long way off a major deal, issues such as they've got to deal with pension reforms and possible hike in VAT, and I think they've decided to describe these as a line in the sand, and I think it's almost insurmountable. But as ever with the Greek situation, the advice is don't hold your breath. Some commentators say there may be some wriggle room that can achieve and to extend the negotiations, but it's so unlikely. The repayment scheduled to the IMF is not negotiable. The IMF has stated that. Either Greece pays the 1.6 billion to the IMF in June, or it will be in default. I guess the bigger question that we need to ask is whether the financial markets can deal with a Greek default, and that's almost difficult to predict, although I think they're in a lot better position now to deal with it than they were 3 years ago. I suppose with all these sort of things which haven't happened before, a Greek default, actually the Greeks have defaulted before, but not in this particular way. But the question and the uncertainty that surrounds it will continue to undermine elements of the market. Certainly the euro, which slipped significantly on Tuesday, equity and bond markets to varying degrees. Throw in the Federal Reserve and the rate rise speculation that I've mentioned, and you can see perhaps why the markets are in such a state of flux. We haven't reviewed the events this week because of the bank holiday. We didn't have our workshop on Monday, but just a quick run through of the remaining events. We've already mentioned the G7 meeting culminating on Friday, the last day of the G7 meeting in Dresden in Germany. Other than that, the most important number, I would have thought by some mile, is the GDP data to be released on Friday at 1:30. This is what's called the prelim. We've already had the advanced reading, which was an initial reading of plus 2.2%. So the economy grew at an annual rate of only plus 0.2%, and that was below expectations. But expectations are for a significant downgrade of this particular number to minus 0.9%. Minus 0.9%. That is factored in. So anything better than that, you could see a slight improvement in the markets. I think it would have to be a significant improvement for it to sway traders regarding interest rate expectations. But a better number will add more vigor to the dollar, which it probably doesn't need too much of that at the moment. It's been particularly well bid over the last couple of days. So a very short week with the holidays at the beginning of the week and little data out this week. There is not much else to discuss, except to say that there has been a significant shift in the US dollar. Will it continue? Let's wait and see. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.